You guys see that? It's a 30-year treasury. Dropped like a brick in water today. Let's take a look at the 10-year treasury. Dropped like a brick in water so far today. After the numbers of the economy expanded at 6.9% annualized in Q4, much higher than expected. And yet the bonds are dropping, the yields, which means the prices are going up. Why do prices go up? Let's take a look. Do prices go up when people are selling, or do prices go up when people are buying? So basic economics. Prices, and there's always an equilibrium. So you always got an equilibrium. So people say, I want to increase my sale of something, all right? And the buyers are decreasing, the sellers are increasing, the buyers are decreasing. What does that happen to your prices? Think about it. If you got 20 houses on this market, and we'll just say you got one buyer and you got one seller, that's an equilibrium. Now we have 3 sellers. 3 people are trying to get out of the neighborhood. You still got that one buyer. What does that do to the prices of those 3 houses? It goes up or down. It goes down. You got 3 sellers. Before we had one buyer, one seller, equilibrium. Now we got 3 sellers and we still got that one buyer. In fact, that one buyer might say, yeah, I don't know, man. There's a reason why all the 3 of these people are selling. I might go to look at a different neighborhood. So why would bonds go up in value, which means a drop in yields, when the economy is smashing through the roof and inflation's high? What that normally means is that the Fed is going to be raising big time to stem inflation, to stem the huge, robust growth of the economic activity. We got to stem inflation because economic activity is so high, we got to beat it back because it's causing inflationary numbers. Thus, we're going to raise rates. And what happens to bonds when you raise rates? Oh, that's right, the bonds drop in value. So why would people be buying bonds right now? It doesn't make any sense. It doesn't make any sense, but yet that's what's happening. There should be a huge sell-off in bonds because the markets are going way high. The Dow is up 360 points. The S&P 500 is up 41 points. 1%. Because the economic outlook is great. Look at the GDP. So bonds, stocks go up, bonds go down, right? Because people sell their bonds to buy stocks. But that's not happening. Stocks are going up, bonds are going up. It's all fake, man. Now, when I mean fake, look, I'm not saying it's manipulative. I'm not saying anything like that. Just all the data and the economics that says if X, Y happens is all freaking fake. Guard the hen houses, man. Guard the hen houses. That doesn't mean you sell everything. It just means, I'm telling you right now, all the modeling that these fools do on Wall Street and economics departments throughout, no one knows nothing. Gosh, it's so frustrating. Well, our economic model suggests, oh, good night. Let me just show you something. I love this. I'm a fan of John Kenneth Galbraith, but this is a great, great quote. The only function of economic forecasting is to make astrology look respectable. I cannot agree with that more. In fact, it's just funny. I was reading this real quick from 2013 about God invented economists to make astrologers look good. So why do economists get all the Nobel Prizes? Yeah, 100%. Hold on a second. Let me get rid of this. Boink. I'm actually surprised they're allowing Paul Craig Roberts to write. Isn't that interesting? Because he's a crank. All right, so here we go. To not write, but to even be mentioned here. So if we go down to, I just want to show you something real quick. It's funny. As for Nobel Economics Prize, I'm hardly alone in alleging extraordinary bias. Even the descendants of Alfred Nobel have noticed it and have threatened to deny the economics prize the use of the Nobel moniker. In their view, Alfred Nobel would have disowned many of the kooks who have been honored in his name. It's worse than useless. It's dangerous. Despite being contradicted by all the empirical evidence, these economists stick by theory. Sooner or later, the dollar will collapse and inflation will soar, says Paul Craig Roberts, who is principal architect of Reaganomics. He cites the laureates Robert Merton, I think has affiliation with George Mason, actually, and Myron Scholes. Myron Scholes, that name ring a bell? As classic example was wrong with the Bank of Sweden selections, or rather the selections of a committee of experts convened by the bank. Merton and Scholes shared the prize in 1997 for supposedly brilliant work on how to value financial derivatives. The following year, a huge hedge fund they advised was brought to the brink of bankruptcy, and after being rescued by the Federal Reserve, had to be wound down in 2000. Undeterred, Scholes went to run another fund into the ground in 2008. Meanwhile, a fund advised by Merton went bankrupt in 2009. Of course, by no means are all economists quacks, but the best economists are modest souls with a lot to be modest about, i.e. Thomas Sowell. A notable proponent of this view, they recognize that useful economics tends to be simple stuff, quite bereft of higher algebra. 100%, that's what Thomas Sowell says. We're going to miss, Thomas Sowell is not long for this world, and I'll probably cry when he dies, because that guy has such an impact on me as a human being, as a good man. Obviously, he's an economics giant. He'll never get the prize because he says, you have all statistical models, I don't care. And he doesn't care, but that's what I'm gaining from it. A notable proponent of this view is a Korean economist, Ha-Joon Chang, who recently commented, 95% of economics is common sense made complicated. And even for the remaining 5%, the essential reasoning, if not all the technical details, can be explained in plain terms. Yep, 100%, man. In the words of Pat Choate, the prominent critic of the economics profession's pretensions to mathematic rigor, economics is not a science at all, but an art. His point is that economist models depend crucially on assumptions, and their predictive value is wiped out if the assumptions are off. 100%. I cannot. This guy sounds familiar to me. Eamon Fingleton. But let's look. I'm just curious. Paul Craig Roberts. I thought he went on the. People started. Is that the right thing? Yes, it is Paul Craig Roberts. He's got a podcast. Since 2008, I think he got banned by National Review. He's a frequent radio Council of Conservative Citizens. Oh my goodness, the CCC. 9/11 truther Kevin Barrett. Oh my goodness, he's crazy. His own website, and he works with Ron Unz. Yeah. He got banned. I could have sworn that Paul Craig Roberts, National Review, banned him. Hold on a sec. I can't remember exactly, but Paul Craig Roberts got banned from National Review. Mark Stein got banned from National Review. National Review's clown show, man. Bill Buckley was just. I'm not a fan of Bill Buckley anymore. I know Rush Limbaugh was a huge fan of Bill Buckley, but I remember reading back when was he or his wife came up with cancer, lung cancer. He wanted to ban cigarettes, let no one, make them illegal. This is the same outfit who said, let's end the war on drugs. It's lost, which I completely agree with. But he said, let's ban cigarettes because they hurt him. And also, don't forget, Bill Buckley during the AIDS crisis, which we'll dive into here in just a second because it's very, very interesting. Bill Buckley is the one who got rid of the John Birchers and stuff back in the 60s. He said, no, we're not going to take radical opinions on that. That's what led the conservative Republicans to go away from the more nationalistic, populist, and more into the corporatist realm that National Review led. And look where it led us today. There is no counterpunch to the Wall Street narrative. The state legislatures are different, but in D.C., it's all corporatist chamber of commerce crap. The Democrats or Republicans. All right. But anyway, this is interesting because here's John Tamny, the two faces of Paul Craig Roberts. He doesn't talk about the Roberts being banned from National Review because his crazy opinions. He says, years ago he got tax cut right, but he's all wrong in outsourcing today. So let's see. Citing a University of California study, Roberts says that 14 million white-collar jobs are vulnerable to offshore outsourcing. This is in 2005. The loss of these jobs is fool's gold for companies, and that the U.S. workers will eventually see lower wages and less opportunity if companies continue to move jobs offshore. All right. Let's see. The flip side, but Roberts, so basically he says, Roberts acknowledges in certain white-collar fields, Chinese and Indian labor can outcompete the work product of laborers in the U.S. Right? But Roberts can't have it both ways. He deplores our trade deficits, all the while arguing that the U.S. is headed for a third world status. 2005. Are we more advanced than the rest of the world, or are we decaying? I mean, what do you think? I don't think it takes rocket science to say we're moving towards a third world status right now, 100%. I'm not saying we're there. I'm not saying we're close to be there, but you can see that the tide has shifted, 100%, man. We are on the, we're going down. We're not even on the precipice anymore. We're on the other side of the mountain. Just like our genes, they don't evolve. The deleterious aspect of genes, of empire, is all right here. In decrying what he sees as a trade imbalance, he fails to address what causes the imbalance, which is the record foreign purchase of U.S. stocks and bonds. Roberts might argue that part of our trade deficit is related to foreign central bank purchases of U.S. debt, but who would want to own the debt of a supposedly imploding economic power, let alone equity in its private companies? Is what he's saying were remotely true, the U.S. would be the first failing economy in world history to draw massive amounts of investment capital from around the world. Now, see, this is silly. This guy wants to have it both ways, too. He says they're buying our stuff, thus we're inherently a good place to invest in. What I always say is, Tina, there is no alternative. But remember, who owns the most of our debt? It's us. We own the vast majority of our own debt. China doesn't own the vast majority. Japan, the EU doesn't. The United States does. Instead, the lesson here is that U.S. companies aren't doing the right thing and adhering to the law of comparative advantages, but they're also doing what is essentially to attract capital that will fund more productive employment in the future. 15 years hence, can we say this happened? No, it's not. Paul Craig Roberts should know this well, given the productivity arguments to be made in defense of tax cuts 25 years ago. No, 100%. We are heading for a third world status. I don't think anyone can argue with that as we sit here and look at the swamps that are New York City, pushing people off trains, bank robbers in LA. I mean, look, that's not, get the hell out of there, man. That's all you got to do. But San Francisco, literally poop patrols, not for dog poop patrols, for human beings. This is insanity, man. We're de-evolving as we speak. Not all of us, you don't have to, but at the end of the day, all the economic stuff is just silly. I have one back there, one of these things with Thomas Sowell, his book, just talk about the insanity of the economics profession being taken over by mathematicians who want so desperately that physics and be treat us as science. And I had a guy on my YouTube channel says, economics, they use all these mathematics, so they know what they're doing. They are a science. The fools will never part from being a fool, man. That's all there is to it. It's nuts. Love your thoughts. We'll see you.